Welcome to Power Charting. I'm Bruce Fraser, your host, and we have a special episode today. We have the doctor in the house, Andrew Cardwell, Dr. RSI. And we thought that with this market getting roiled as it has in the last week, that we'd better bring in some heavy-duty, capable market analysis. And so we're going to have a current market discussion here. Andrew, welcome.
Good to be with you, Bruce. Always a lot of
great you're here. So I asked Andrew to send me a headshot. So he sends me 3. So I put them all up here. And so here's his good-looking mug on the left. But then he sends me this other one. I said, send me a headshot. And he sends me this thing on the top. And then he sends me a picture of who I believe is Paul Volcker.
Yeah, it's my hero. It's my hero.
The one on the top.
Beside you.
Oh, well, thank you. I appreciate that. Well, so the one on the top, on the right, I'm looking at it and I'm going, oh, a headshot. Andrew's sending me what's in his head. Right. And so what's in his head is our charts. It's all charts, right, which I would expect nothing less.
Somebody asked me to tell them how I was able to do what I do, and I sent them that top chart picture, that top right.
Oh, well, is that the content of your, is that the content of your brain right there?
Yeah, I put a chart in and I decide whether it shows blue or red, whether it's buy or sell.
I like it. All right. Well, we're going to put you to work today.
Okay.
All right. So here we go. First, a brief announcement. TSASF, Technical Securities Analysts Association, is going to have our annual conference. This is a live event in San Francisco at Golden Gate University, and we have a remarkable group of speakers that are going to be speaking live that day. It's going to be a lot of fun. And so if you're going to be in the vicinity or you're looking for a great vacation to take, please join us September 14th, 8 a.m. to 5 p.m. And it's just going to be a terrific day. Craig Johnson, David Landry, John Lewis, Robin Mesh, Greg Schnell. And so check it out, tsaasf.org. Okay, so first thing I want to do right away, and I'll put this up at the end also given time, is here's Andrew's contact information, email, his website, and you may wish to contact Andrew about his course offerings. So we'll put that up again at the end. Okay, so as always, I start power charting with a brief discussion of the current market from some perspective. Try to be a little different, but we have this phenomenal case study going on that we've been doing over the last 3 or 4 weeks, which has been a point and figure case study. This is the S&P 500. You've seen this chart before. We had a big accumulation structure back in June. It produced a count in the S&P 3015, 3034, and then 2 subsequent reaccumulation counts. And these counts also counted into the basic area that into this basic area that we have on the accumulation count, so they are reconfirming. And so we want to look at what happened. You saw this chart last week, and so this is just a refresher, but this count, which was across the 2997 line, S&P counted down to, let me blow this up for you, counted down to 2856, 2829 is our objective range. And so you can see that it was a rather large count. So what subsequently happened is, and we talked about how the structure unfolded. I'm going to show you another example of that in a minute. But this count went down to 2822, which is right into this count line right there, or that objective range. And so it went one box below the low count. And so here we are looking at, that was a one box reversal chart. Here's a three box reversal chart. These are all 5-minute data. But keep in mind that point and figure 5-minute data covers a lot more price area, price range than 5-minute vertical charts. This goes all the way back into May. So here we take a 3-box reversal S&P chart. I've annotated it, put the labeling in, buying climax, automatic reaction, up thrust, sign of weakness. You can see all this in the point and figure chart, last point of supply. So we count from the last point of supply across. This gave us a count down to 2850, 2840. Well, I drew an arrow down to this 2824 level, which is the low count. You can see it went slightly through the objective range that we had. But notice this arrow points to the close on the day of the low. So even though it went to this low area here, it closed in the middle of the objective range. And that's very common to how point and figure will unfold, is especially in declines, is that declines get a big head of steam. They move very quickly and they move downward and they can overthrow counts. And this is a classic scenario where it overthrew the count slightly, but it came back in to the count range and closed there. Now, what we said was that once we got into this count area, and we always say this about point and figure, is we look for confirmation of stopping action and then a trading range, which could be either redistribution or accumulation for a move up. And so we still have to look at that. I'm going to show you an updated chart here in a second.
Bruce,
Andrew, you were going to say something.
Yeah, let's go back to your other chart. With the reversal that we had off those lows back in late May, RSI was in an uptrend there also, where you're buying climax and your up thrust and your lower supply. We had positive reversal targets up there, but failed to achieve those targets on a closing basis, and it started setting up the end of July for a reversal. I thought it was going to fail, and the momentum was failing. And when it started down, it accelerated. And like you pointed out, sometimes it will overshoot them.
Yes.
And if I have a target up there, if it clears it on, achieves and surpasses it on a close, it shows more strength ahead. But this failed, and failed buy signals are great sell signals.
Well, and this really points out why RSI, especially Cardwell RSI and Wyckoff, really do mesh together
gel
really well. Yeah. So, so let's move on here. Thank you, Andrew. And then, because I'm going to turn over the screen to Andrew in just a sec. So here is resistance level at the beginning of 2018. This is a weekly chart. This is interesting and maybe important because look at how the market broke here after a slight up thrust right here at the end. Slight up thrust. Well, it's right on the verge of committing back down through this big resistance zone that we have, which we do not want to see that. We want to see it hold here, consolidate, build another accumulation count, and then start to move back up. From a bullish scenario perspective, if it goes back down in and fails back into the trading range, then this very well could be some kind of a major up thrusting action. Which,
well, one other point, and especially to confirm what you're talking about there, if you take the high of January of 18 through the high of I guess it's October,
right here,
it'll come across right where the high was made, connecting those as an upper trend line.
Yes. Oh, I see. So yeah,
trend line.
Yep, yep, like
straight
that.
Across.
I didn't draw it real well, but I have terrible penmanship on power charting. So
that's okay, but I'm saying,
but that's the idea.
Draw a line that almost looks like you have a big megaphone if you connect the bottoms.
Yep. So we really want this to consolidate here. The bulls want this to consolidate here and start to be able to build bullish count to get back up and out of here. So, and backing up and testing is not an unusual thing. So, okay, let's press on. Thank you, Andrew. And so I want to show you this one last thing. This is a chart you have not seen before. And this is 30-minute Dow Industrials. And here's the structure. You've seen the structure on the S&P of distribution. Here it is on the Dow. It's a different picture. Buying climax, automatic reaction, series of secondary tests. Well, look at here. Look at this declining gradient of lower highs all the way through here. And you can see that these early rallies are pretty good, but notice how the rallies that come after hitting support are of poorer quality. And look at how this one barely has any rally in it at all. And then you have a major sign of weakness breakdown and an attempt to rally back up into the ice, what we call the ice, which is this hot pink line right here. And it rallies up above this old support level barely and stops and then turns back down. And this is the completion of distribution. We take our point and figure count from the LPSY and the ICE over to the buying climax. And here I just put this in because I wanted to show you that here is stopping action, selling climax potentially, automatic rally, secondary test. Now what we want to see is we would like to see going forward, we want to see a range bound market, and at some later point we're going to be analyzing the volume price relationships to see whether this is redistribution for another decline or whether we have potential accumulation in the very early stages. And so you have to stay tuned. Come back next week to power charting.
Yeah, that's where we talked yesterday with that action at the close.
Yes, and so here is the point and figure of what we just looked at. Three box reversal, ATR scaling, 5-minute data. We were looking at 30 minutes on the vertical chart, and notice how the 5-minute data works so well with the 30-minute right along here. Here's our count, 26,079, 25,846. We overthrew that by a little bit, and then but look at where we closed that area, which was just below the low count. That's not uncommon, especially with intraday point and figure. And now it appears that we're building some kind of a range bound condition, and we're going to want to watch this to see whether or not we can get an upward or whether we get a downward movement. So with that, here is the weekly chart of the Dow Industrials. Here's the January 18 resistance. Look at this. Dow is notably weaker than the S&P. It barely climbed above on an upthrusting action and now is firmly back into the prior trading range. And so we want to watch this closely. There's a big tail here that could produce some kind of a range bound condition, and we hope that leads us to be bullish to a run back up and out, but we're very sensitive to any weakness that would take this back down into the trading range. And with that, Andrew, let's put you to work. And so we're going to turn the screen over to Andrew here and then have him take the rest of the show. So here we go. Okay, Andrew, we see your screen, we see your beautiful charts.
Where's the crystal ball?
Lead us. It's in your head.
Here is the crystal ball. It's all the price action and what momentum's doing. RSI in the middle, and the bottom chart is my CFG, which was my own personal RSI I had developed. If you notice, we're still in that uptrend. And if I slide this box over, I talk about range rules all the time. You see most of the action in the RSI stayed above about the 40 level. I have range rules, and Bruce and I did a session before where I did a PowerPoint on my range rules for trend.
And we'll tell you in a minute how to get to that.
Yeah.
How to see that video.
and it's usually 60 and 40. And as long as it's staying above 40, the trend stays up.
So in an uptrend, 40 is the
Support
oversold
level.
condition, the support level.
Nothing's truly oversold until you see one of these positive reversal patterns that says it's a buy signal. We've seen a couple lately that kept this thing going up. There was one here where the price went lower. Let me zoom in for you. The RSI dipped down. Here's a better example back here. The RSI dipped down, price was down, RSI rallied, price rallied, RSI sold off to a higher low in closing price, but the RSI was lower. So it was more, I use the word overextended, because a market is truly not oversold until you see a positive reversal fail or a negative reversal pattern where the RSI went higher, price did not go higher. And I'll show you an example or two in there on another chart. But this has been a strong uptrend, but this looks like a little megaphone. And it goes right back to where you were talking about this thrust area. The end of June, end of May, when the market started up on the daily, it had the rally. We had the positive reversal targets saying it should go higher. Here's one that was kind of hidden. Price went up, RSI went up, then price come down. It was lower RSI value, but it was higher than it was here, which said it was ready to go up again. And we had another one over in here. But then we started to see bearish divergence. And believe me, folks, bearish divergence is not a true reversal signal. Everybody says, oh, it's a sell, it's over. No, you can get multiple bearish divergences, and it comes down and then it comes right back up because of the support of range rules, a positive reversal pattern. But coming into late June, we had a longer term. I should zoom out for a second. I just connected a momentum low with another momentum low and a low price and drew a trend line on the RSI. And then I will go back and draw the same thing on a price chart. So I'm drawing trend lines as support or resistance on price charts based on RSI points. Kept me long. I did not want to sell. But when we got over into the start of a little bearish divergence and seeing the RSI sell off and price sell off, the positive reversal targets I had on the upside were failing. And good sell signals are usually failed buy signals. I think you had the SPX up also. And this breaking, this RSI support line, I call it, RSI trend line support. This is where Bruce and I talked yesterday at the close. Said it looks like a bounce, but that's all. So I think we do intend to see lower prices going forward because I use some moving averages on highs and lows, and this blue line I call the number. And I do price analysis on pivot points or swing points. And that pivot point line is crossed the 9 on close, crossed the number, and broken the lower bands. These are not Bollinger Bands. There are price bands.
Now, I'd like to just point out that you can really see this distribution that we looked at on the 30-minute chart on the daily of the Dow.
That's what I'm saying. I agree. Yeah. You know, the Wyckoff and RSI work very well together.
Right. So when you see this kind of a structure on the daily, and what I do is I zoom into the intraday, and then I try to tell the Wyckoff tail or do the analysis and the analyze and label the structure, and but you can clearly see it there.
Well, I do it too on the that's a test in the office here. When my approach is always daily, hourly, 5 or 15 minute. I start with the longer term because the longer term trend has an influence, and that's the way the trend is getting supported or being resisted. And then the short term, if you're using short term charts, always know what the one time frame longer is. Now this one's the 60 minute, and here's your distribution you were talking about.
Yeah.
And then all of a sudden it sold off, and that we use the pivot point. We see a range shift. to where it went down below 40 on the hourlies.
You know what
And
I really like about our, Cardwell RSI is the way that you can get good buy signals from what others would call an overbought RSI condition. And you're looking at it and going, this is giving me a buy signal in an elevated RSI. And
right,
also you can get the same thing in reverse in a downtrend.
right. I
Where
call
you,
acceleration, initial accelerations. If I get a positive above 60, it's going to take off to the upside.
yeah.
And that's to smooth the RSI. When I see that, I use a 9-period moving average.
Because that really is an important part of good trend following, is the ability to confirm uptrends in an overbought condition in an indicator, confirm downtrends in an oversold condition where you expect continuation. And I really like that about Cardwell RSI.
Yeah, I've seen a lot of people, they see the RSI drop to 30 and they talk about it being oversold. It's a bullish sign to buy. No, it's not. It's a range shift and say you're accelerating to the downside.
It's bullish for the other guy in the trade.
Well, I need somebody on the other side of my trade.
Sorry.
Yeah, I think I've got about 5 minutes. You did
Yeah. You still have some time. Keep going.
Okay. Where's the SPX on here? There we go. And you can see I put it on hourly charts, and I can see a divergence. And look how this divergence, you had a momentum high, and that first RSI went up to 75. Then it only went up to 69.6 or 70. And then it barely got back up to 60.
And that's a very poor rally in that Dow chart or the S&P chart. Very poor rally.
But this is an S&P. I mean, this is intraday 60.
And then
if I went out a little further to 240, we can see that distribution that you were talking about, the up thrust. I'm looking at it as a failure.
Yeah. Wow. It really shows up there. Yeah.
Because this positive would have been, the RSI got overextended here at 2974, and it came down here to 2976. So you'll see the price went, the closing price was low. The RSI was lower, but the price on close, even on this chart, was higher. So I can draw a trend line there, and then once it breaks that, it usually smokes it, which it did to the downside. And I put moving averages. You'll see I put moving averages on even my hourlies. But the other one I wanted to point out was crude oil, because there's a lot of stocks in the Dow who that have some type of connection to crude oil and products or oil companies. We can see crude should come up on the daily. I don't want the 240, I want the daily. Let's get a daily. And you can see on that rally up that RSI pretty much stayed above the 40 level as the price was going up. But then when it peaked and turned down, I can draw a line at 60. If I get my fingers to work right, 60.7. There's right around 60, what I call a head bump. And even though we went slightly higher here than here, we had a longer term negative. This is where you see the RSI go higher, but the price is not higher than it was before. Then you just subtract them and you target this bottom. So I do think we're going to go down under 50, and that's going to have an effect. It's not a supply situation in oil, I don't think, as much as it's a demand situation. I've been telling my clients for the last couple of months, this is not just U.S. markets. All markets around the world are starting to slow down.
And this is it's
a demand.
Classic sign of slowing demand is classic sign of worldwide slowing economies.
Low growth. Yeah. I would say the percentage chance of a recession within the next 6 to 9 months is probably starting to increase and maybe up around 35, 40%. My economics professor would be impressed, but I told him I'm doing it with those crystal balls that are shown on the first slide we had, and
I
the
would just
RSI.
I was just listening to an economist and just a few hours ago, and he said, yeah, he basically had a similar analysis as you're describing. And so I love the fact that yours comes from your RSI studies.
Oh yeah, I used to
Yeah.
tell my professor that. I said, you taught us a lot. I appreciate it, but I'd learn more about markets and movement. The next chart I wanted to show was gold, because I have been bullish on gold all year. And people told me I was crazy. And if you've got something like I've seen with the RSI for 40 years, and I will mention the first 10 years I did it, I only calculated and plotted by hand. I did not have a computer. My first computer gave me the charts and the overheads to do at a lecture. So, but I've been bullish gold, and I thought maybe it was going to be inflation was going to come back, but it's not so much inflation. People are going to gold for safety. And I think you've seen in Bitcoin.
It's currency disruption.
Right.
It's this race to the bottom in all these major currencies around the world. And actually, I went to a conference like 30 years ago, and it was an economist had made the argument that the highest correlation of gold to bull markets and bear markets are related to currency disruption and not to inflation.
Well, when I see, and I can say this down here is about 35 on the RSI. The one at the bottom, the CFG, that's my other my personal RSI. It had divergence. It had a rising bottom. RSI started a rising bottom and it turned up. And when this was 1290, if I go out to a weekly, you'll see even the weeklies are starting to turn up. The range is starting to shift. We're taking out the 60 level. The moving averages have taken out the 60. This 9-period moving average I use on my RSI 14 went above 60, telling me the next correction is just a correction. And to see a positive of about 1273 and 1294, I was expecting to see $20 above 1355. So once it broke 1375, it's off to the races, and it is.
In classic Wyckoff, we would call this a major sign of strength. And so this is interesting that your major sign of strength in your RSI analysis coincides with the major sign of strength in Wyckoff method.
That's why I like visiting with you from time to time, and we always talk, you know, that the two schools, the two methodologies are so similar and react accordingly. The rules are different, the interpretation is different, but a lot of times you will set an upthrust target and I'll set a positive reversal target.
Beautiful.
So
now we're close to out of time, but are there any final thoughts that you have regarding gold before we end the session?
Well, I was looking for a close above 1340, 1370, which we got. And now it's telling me that we were headed to 1550 because we've taken out all the highs from the last couple years. And the fact that we have says it wants to go higher. I think if we get above 15, we're going to 17.
Hang on. Andrew, here is the contact information for everybody. Thank you so much for being here. Andrew said that if you attended today and would like to receive his course offerings, that he will offer you a discount. So check with him, Andrew. Thanks so much for being here.
It's always great. And we made it without Drewisms too.
Thank you and take care. See you next time.
All right. Bye-bye.